And a very warm welcome to the 20th of October 2017. My name is Rishi Patel, co-founder, master of the markets, the Elite Traders Conference, and the Traders Open Day. And a very warm welcome into the Forex Friday here on the 20th of October. The time is just coming up to 2:30 p.m. and you can see we are running one open position at the moment on the live trading room and the elite room as well, which is a money bars position on the Euro US dollar long. So we're currently long from this bar just here. We entered this trade on Monday evening. So this trade was entered on Monday evening. We've been holding that, and of course you can see today we are on Friday. Apologies, sorry, not Monday evening actually. We entered this trade on the close of the 18th, which was actually Wednesday evening, I believe. Yes, it was. Wednesday evening is when we entered this trade opportunity to go long. I was talking about Monday because I was just confused with the dollar Swiss trade that we've already closed out, which I'll show you in just a moment. But we're long on this position euro dollar from Wednesday evening, from the close of the market. We're looking for this particular bar here to become a confirmed swing low, just like these ones here. And we'll continue to look for those opportunities as we move on into the next coming days. We'll be looking for this to confirm. So you can see it has pulled back here at the moment. We're only in £103 of floating profit at the moment. We're looking for that to, of course, increase. Our profit target is up here at 108 pips of upside, and that would equate to £1,630 of profit if and when it reaches that level. So we'll continue to monitor that. What were the closed positions for the week? Well, let's reference the various trade journals. Let's start by looking at the live trading room journal, and the only opportunity that we'd closed this week from the 16th, which I believe is Monday, yes it is, through to today the 20th, is this dollar Swiss position, which we went long on at 9743. So 9743 we were long dollar Swiss. And let me show you where that is. That's going to be in and around this price level just here, 9743. You can see the close of that bar, and we took that position off the market for a 42 pip upside, roughly speaking. It will just need to include spread, so it won't be that exactly. Let's have a look at what it was. 41 pips is what we were shooting for. 39 pips is what we actually obtained at the end. So 39 pips of upside profit on that dollar Swiss franc. So we took that position on both the live trading room and the elite room as well. So 39 pips of profit there, equating to £390 at £10 per pip. That was the only trade for this week. And of course you can see, if you look on the live trading room journal, you've got the euro US dollar just there, which has an open profit at the moment. We entered at 11790. Where are we at the moment? We are at 11794, so around 4 pips of profit at this time. You can see equating to £82. We've taken this at $20 per pip. So that's pretty much it by way of the euro US dollar this evening. We will continue to monitor that into next week, and we'll be looking to close out that as and when we get the signal to do so. We'll trail the stop, and we'll follow the plan exactly for the money bar strategy. So certainly for the live trading room, the only trade that we've taken this week has been that dollar Swiss franc opportunity, which we entered on the close there. We took off the market 2 days later. So that's a profit this week so far of plus 39 pips, £390. How have we done on the elite room? So on the elite room this week, we have taken one opportunity on the smart money strategy, which was on dollar Swiss franc as well. We took the our money off the table for just an 8 pip profit. That one didn't give us the run that we were looking for. Again, we entered here. We trailed our stop accordingly, but it didn't give us the run we were looking for, and that took us out of the market for an 8 pip profit. So 8 pips there initially on smart money. And on the money bars strategy on the elite room, if we look at money bars 27 system, you can see dollar Swiss there again, off of the market on the 17th of Feb for a 36 pip upside. So 36 pips on dollar Swiss plus the 8 pips on the dollar Swiss smart money. giving us a total this week of 42 pips of upside of £420 for the Elite Room. So net profit overall. We'll continue to monitor these opportunities as we go on into this week. Let's go on to the topic for the day. And the topic for the day I wanted to cover was quite a simple beginner topic, which is in and around limit orders and stop orders. So quite a few questions coming in from some of our newer client base, just asking the question around limit orders and stop orders and what the difference is and when to use what. So I thought we could use this live market opportunity at this time just to kind of go over when we would use each of these types of opportunities. So what I'd like to do is just sort of use this opportunity to do that. We've got some good trades running which we can actually give live examples on. So let's say, for example, there are two types of orders when we enter the market. Generally speaking, we can put on either a limit order or a stop order, be it buy or sell. It can either be a limit or a stop order. So what's the difference between the two? Well, look at the euro dollar at this point. You can see we're currently above the level that we entered the trade. So the dashed green line represents the entry level for this trade, and the current price, which is right there, is currently above that level. So if I wanted to enter the trade at this time, I would need to use, if I wanted to enter the trade and I wanted to buy, I would need to use a buy limit order. Right? I would need to use a buy limit order because the current price is a better price than where I want to enter. That's what it is. So because the current price, now you can see it's just falling just a touch below the entry level, so the example not as relevant, but where it was just above before for the whole of these last 2 days, I would need to use a buy limit order to enter at this level here. Now you can see that the price has just dipped below. So that basically means that now if I wanted to enter the order, then I could use a stop order. So this indeed would be a buy stop at this time, because the current price is worse. Because the current price is worse than the level that I want to get in. Absolutely, because the current price is worse than the level that I want to get in, I need to use now a buy stop order to enter this. So if I put a buy limit and I put this entry level here that we've got on this euro dollar, this would not work because the current price is now dipped below the entry level, and we've got a worse price. The current price is a worse price than where I want to enter. 8.7 is a worse price than 9.7. So you can see the entry that I got here was 8.9. The current price is 8.7. So by 2 pips, we have a worse price than our entry price. Now, because I want to get in at a better price, or the current market is at a worse price, and I want to get in a little higher, I would now need to use what we call a buy stop. Right? So a buy stop. So this is the difference between the two. Either I can use a buy stop or a buy limit. There isn't anything in between. So there's not really much I can do by way of opportunity if, for example, the price has run, which it has at the moment. It's sitting right on the entry level, which is a little inconvenient for me for this live example. But if the price was, let's say we didn't have any of this price action. In fact, let's go ahead and see if we can block this out, and this will actually help to illustrate my example. Let's say we didn't have any of this price action just here. Let me erase this out. So let's say that the current price was indeed here, and because the current price is here, the current price, no, that's no good for me, there we go. Because the current price is here, I would enter at this price level here using a buy limit order. Okay, that's what I would do. I'd enter using a buy limit. If I were to use a buy stop for this, the order would not go through, because where I want to enter is the current market, of course, is the current price is at a better price. The current market is at a better price than where I want to enter. So entering up here at 18.24 is a better price than 17.88. So because I want to get in at 17.88, but the current market is here, the current market is a better price, and I would need to use a limit order. If however the price does dip below, much more below, down to this level here, and I want to enter the market at this point, then I would need to use here what we call a buy stop. And the reason that I would use a buy stop is quite simply because the current market is at a worse price than where I want to enter. So entering at 117.59 is a worse price than 117.88, and because of that, I would use a buy stop order. So of course it is just the inverse for a short opportunity, and the short opportunity is exactly the same thing, but just the other way around. So that's pretty much it by way of this example. Let me give you an example of a short order as well, so as not to confuse matters, and that it becomes very clear as well. Let's look at let's look at the euro yen. It's a good example of something that we can look at for a short. Let's say that I wanted to enter the market short at this price level just here. Now currently, let's say I wanted to sell here. So currently, where the market is the current market, let me just grab the green pen, the current market is at a better price. The current market is at a better price than where I would want to enter. I want to enter at a worse price. Because I want to enter, and you'd agree with me that 131.78 is a worse price than 133.68. Because I want to enter at a worse price, what I would do is I would use what we call a sell stop. A sell stop. Because I want to enter the market at a worse price compared to where it is now. Supposing I wanted to enter the market at a better price. Let's say that this move has already started, and I saw this, and I still wanted to sell, but I wanted to sell and enter the market at a better price than where it is, at a better price than where it is. Say I wanted to sell at the same level, but now this level that's up here is a better price than where the market currently is. For this, I would need to use a sell limit order, because I want to enter the market at a better price compared to where it is now. The market needs to go up from 130.10 up to 131.78. The market will need to go up there. Then I would need to wait for a reversal and then for it to come down. But it needs to touch on this level, which is a better price than where it currently is. And because I want to enter at a better price, I use a sell limit order just there. So that's pretty much it by way of these limit orders just here. I've also done a summary of the positions that we're on at the moment. Euro dollar is the current trade that we are on at the moment, and you can see we are just hovering around our entry level at the moment on this money bars opportunity. So that's where it is. Let me just give you some probabilities for this euro dollar trade to work out. This is very interesting because we've just got the research back on this. So a couple of interesting statistics here. So this is what we're looking at here at the moment, is what we would class as a PSWB long. Now on the euro US dollar, first of all, there we have tested in the market, we've tested 202 PSWB longs. Now of the 202, 98 of them have gone on to become what we call a secondary or a confirmed swing low. So we've got, but first of all, before we even start, we've got a 48.5% chance that this particular opportunity will go on to become a confirmed swing low. So there is a 48% chance of that. The next question asks us over what period of time will that happen? So bearing in mind that if it does become a secondary, then it will take 48.39% chances less than or equal to 2 days, which actually hasn't happened, because if you look at the PSWB in these 2 days here, this is day 1, this is day 2, that has not become a secondary, so we're outside of that parameter criteria already. If it's less than or equal to 3 days, which would mean it had become a secondary today, there is a 76.3% chance of that, an 86.02% chance it will become within or less than or equal to 4 days, and a 91.4% chance of less than or equal to 5 days. So we're going to wait 5 days, including the day of the PSWB. So we've done 3 days already. If in 2 more days it doesn't become a secondary, we'll look to close that trade out, because at that time there's only a 10% chance that it will become a secondary after that, which is a very slim chance. We've also got further down on this same spreadsheet, I've also got the statistics for where to position our target by way of what a multiple of this range of PSWB does this actually move? And that's how we've constructed all of these target levels and parts of the strategy like that we've actually constructed using that information. So we've got all the percentage probabilities locked down for the strategy that we're using just here, so we're very confident of the outcome. Even if this does dip into a loss, and even if it takes the initial loss, we're not really too worried about it, because we understand the statistics behind this trading system inside out, and in forward testing markets it is meeting all the statistics we expect. So we'll continue to run these positions, and we will look for opportunities as we move through. So that's it from me on this Forex Friday update on the 20th of October 2017. I look forward to speaking to you all soon. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.